The UK tax system has undergone significant changes for the 2024 tax year. These changes affect individuals and businesses alike. This guide provides a clear overview of the key changes and their impact. Seeking advice from a tax professional is always recommended. One major change is the freezing of income tax thresholds. Wages might increase, but tax-free income remains the same. Another change is the increase in corporation tax. The new tiered system aims for fairer contributions from larger companies. Stay informed and prepare your finances for the new tax year. For many, income tax is the most significant tax they pay. Understanding changes to income tax bands and allowances is crucial. The personal allowance remains frozen at £12,570. This freeze continues until 2028. You'll pay 20% tax on earnings between £12,571 and £50,270. Earnings above this level are taxed at 40%, and income over £150,000 is taxed at 45%. These frozen thresholds mean you might pay more tax even if your salary increases slightly. Use an online tax calculator or consult a tax advisor. Corporation tax, the tax levied on company profits, has seen a significant overhaul. The UK now has a tiered system for corporation tax, replacing the previous flat rate. This new system impacts businesses differently depending on their profit levels. For small businesses with profits of £50,000 or less, the good news is that the corporation tax rate remains at 19%. This is designed to support startups and smaller enterprises. However, for businesses with profits between £50,000 and £250,000, a new marginal rate applies. This means they'll pay a portion of their profits at 19% and the rest at the main rate. Larger businesses with profits exceeding £250,000 will see a more substantial increase. The main rate of corporation tax for these businesses is now 25%. This significant jump aims to ensure large corporations contribute their fair share to the UK economy. Section 4 National Insurance Updates for the Self-Employed. National insurance contributions are a vital part of the UK tax system, funding essential services like healthcare and state pensions. For the self-employed, understanding the changes to Class 2 and Class 4 NI contributions is crucial. Class 2 NI contributions, a fixed weekly amount paid by self-employed individuals earning above a certain threshold, remain at £3.15 per week. However, the threshold for paying Class 2 NI has increased slightly, offering some relief for lower-earning self-employed individuals. Class 4 NI contributions, calculated as a percentage of your profits, have also seen changes. The rates for Class 4 NI have increased slightly, meaning self-employed individuals will contribute a bit more towards their state pension and other benefits. These changes might seem minor, but they can impact your overall tax liability. It's crucial to factor these changes into your tax planning and ensure you're making the correct contributions. Section 5, VAT. Do you need to register? Value-added tax is a tax charged on most goods and services in the UK. Businesses with a turnover above a certain threshold must register for VAT. The VAT registration threshold remains at £85,000 for the 2024/2025 tax year. If your business's turnover exceeds this threshold, you must register for VAT and charge VAT on your sales. You can also choose to register voluntarily even if your turnover is below the threshold. This can be beneficial if you mainly trade with other VAT-registered businesses. Understanding your VAT obligations is crucial for businesses of all sizes. Failing to register when required can lead to penalties. If you're unsure whether you need to register for VAT, consult with a tax advisor or use the resources available on the HMRC website. Section 6. Capital gains. Tax less you can earn, tax-free capital gains. Tax is a tax on the profit you make when you sell an asset that has increased in value. This could be anything from property to shares. The 2024/2025 tax year sees a significant reduction in the annual exempt amount for CGT. The annual exempt amount is the amount of profit you can make from selling assets before CGT applies. This amount has been reduced significantly from £12,300 to £6,000. This means you'll now pay CGT on a larger portion of your capital gains. The rates of CGT remain unchanged, with rates varying depending on your income tax band and the type of assets sold. However, the reduced annual exempt amount means it's more important than ever to understand your CGT liability when selling assets.